Welcome to an in-depth exploration of Bitcoin's recent surge. Bitcoin's price has skyrocketed, nearing record highs, and this has captivated investors worldwide. In this breakdown, we'll dive into 10 key factors influencing Bitcoin's price and why so many people are watching this rally closely. From political influences and ETF excitement to the role of Bitcoin as an inflation hedge, we'll cover the dynamics fueling the rise and what might shape Bitcoin's future. 1. Bitcoin's remarkable price surge. What's fueling the interest? Bitcoin's price has climbed nearly to $90,000, driven by both institutional and retail investors rushing in to capitalize on recent gains. For the past few weeks, Bitcoin's market activity has outpaced traditional assets, creating excitement around the potential for a new all-time high. This surge is fueled by a mix of regulatory advancements, adoption by big institutions, and geopolitical factors that have increased Bitcoin's appeal as a safe haven asset. 2. Bitcoin Spot ETFs, a game changer for demand. A major driver behind Bitcoin's recent rally is the rise of spot Bitcoin ETFs, exchange-traded funds, approved by prominent financial firms, notably BlackRock and Fidelity. Unlike futures ETFs, which are based on contracts, spot ETFs invest directly in Bitcoin, making it easier for mainstream investors to gain exposure to Bitcoin's price movements. Billions of dollars flowed into these ETFs upon their launch, increasing Bitcoin's demand and driving up its price. The success of these ETFs could be a watershed moment, as they make Bitcoin more accessible and attractive to the broader public. 3. Political tensions and the U.S. elections, the Trump effect. The U.S. presidential election of 2024 has added an unexpected layer of volatility and excitement to Bitcoin. Investors speculate that if Donald Trump wins, his potentially pro-crypto stance could lead to relaxed regulations, making it easier to invest in Bitcoin and other cryptocurrencies. This so-called Trump effect has fueled demand, as many investors view Bitcoin as a Trump hedge. While Trump's victory isn't assured, this narrative has added to Bitcoin's appeal as a store of value during politically uncertain times. If a more crypto-friendly administration takes office, the market could see even greater inflows into Bitcoin. 4. The upcoming 2024 Bitcoin halving and scarcity. Another significant event in the Bitcoin community is the 2024 Bitcoin halving, expected to take place in April. Bitcoin's halving is a mechanism that reduces the rewards given to miners by half, which effectively cuts the rate of new Bitcoin creation. Historically, halvings have led to price rallies due to the reduced supply, and many believe the upcoming halving could drive Bitcoin prices even higher. As supply tightens and demand grows, this scarcity model makes Bitcoin increasingly valuable, especially as more people anticipate post-halving gains and start accumulating Bitcoin in advance. 5. Bitcoin as an inflation hedge, a digital gold standard? Amidst global economic uncertainty and high inflation rates, Bitcoin is increasingly seen as a hedge against inflation. Unlike traditional currencies, Bitcoin's supply is fixed at 21 million coins, which creates a deflationary model. This limited supply has positioned Bitcoin as a digital gold, offering a potential store of value during times of currency devaluation. For those worried about the declining value of fiat currencies, Bitcoin has become an attractive option to protect wealth, with more people viewing it as a way to diversify their portfolios and secure assets against inflation. 6. Corporate adoption and big-name endorsements. Several high-profile companies have added Bitcoin to their balance sheets, lending it credibility and encouraging other companies and individuals to follow suit. Companies like Tesla and MicroStrategy have invested billions in Bitcoin, setting a precedent for institutional adoption. These investments have bolstered Bitcoin's reputation and are seen by many as a vote of confidence in its potential as a valuable asset. As more companies incorporate Bitcoin into their financial strategies, its stability and legitimacy continue to grow. 7. Institutional involvement and market maturity. Beyond ETFs, major banks and financial institutions are beginning to offer crypto-based services, integrating Bitcoin with traditional finance. Institutions such as Fidelity and BlackRock, along with prominent banks, are moving into the cryptocurrency space, indicating that Bitcoin is gradually becoming a legitimate investment asset. This institutional adoption has stabilized Bitcoin's price movements and brought more liquidity to the market, which in turn encourages other large investors to join. If regulatory clarity continues to improve, institutional involvement is likely to deepen. 8. Volatility and market risks, hype or long-term investment? Bitcoin remains a highly volatile asset, and rapid price swings are not uncommon. Some experts warn that the current hype could lead to a short-term bubble, followed by a correction once initial excitement fades. Events like the Trump effect or the ETF wave may lead to a temporary price increase, but could also trigger sharp corrections if political outcomes or ETF performance falls short of expectations. Despite this, long-term investors view Bitcoin's volatility as a natural part of its growth and see its upward trajectory as resilient, especially with continued institutional interest and the upcoming halving. 9. Impact of global financial policies and the dollar's decline. Bitcoin's price is also influenced by global monetary policy, particularly in response to rising inflation and interest rates. As central banks, including the Federal Reserve, adopt tighter policies, investors are increasingly seeking assets that aren't tied to traditional banking systems. Bitcoin's decentralized nature and independence from any central authority make it an appealing alternative for those looking to diversify outside of traditional markets. As fiat currencies, especially the US dollar, face pressure, Bitcoin becomes more attractive as a hedge against government-controlled assets. 10. The future of Bitcoin in the financial mainstream. With increased acceptance, Bitcoin has the potential to play a significant role in the global economy. As it becomes more embedded within mainstream finance, it's likely to become a standard part of institutional portfolios, making it less volatile and more stable over time. Continued regulatory clarity could pave the way for more traditional banks and asset managers to incorporate Bitcoin into their offerings, which would further legitimize and stabilize the asset. Over time, Bitcoin's reputation as a digital gold could make it an enduring part of the financial ecosystem, transforming how people think about and store wealth. Thank you for staying with us through this exploration of Bitcoin's fascinating rise. If you enjoyed this breakdown and want to stay informed about cryptocurrency developments, please like and subscribe for more updates. Bitcoin is reshaping the financial landscape, and we'll be here to guide you through the most exciting trends and insights in the world of crypto.